headphones because it's going to play a video. Welcome to Loan Officer Success Live, sponsored by Premier Lending, the show where the mortgage industry's top players pull back the curtain. Your host, Devin Dubuque, sits down with industry leaders, top producers, and game-changing mortgage tech innovators, all sharing their unfiltered strategies, bold ideas, and proven secrets for success. Get ready to take notes, think bigger, and play to win, because this is Loan Officer Success Live. All right, guys, we are live, and we've got Icon in the house, returning co-host Ian Smith. What's up, brother?
What's going on, Devin? How you doing today, brother?
Man, I'm excited. Glad to have you back. Just couldn't keep you off the ride. And here we are again, ready to go at it. I think the last one was a really great episode. We talked a lot about what's happening in the Charlotte market. Yep. But today, man, what do you got in store for us? What are we talking about today, Ian?
Yeah, so I mean, the name of the live stream is what we're talking about, not your father's mortgage. I've been in this business now for 10 years, and I've just heard every rumor and fake news, what you need for mortgage home buying that there is, from people's parents, uncles, aunts, distant cousins, twice removed. And I'm here to debunk a lot of that and help people understand how they can get into a home today.
Ooh, we're getting rid of the common myths, right? So whatever you believe about home ownership, you might be wrong, right? Is it a myth or is it a fact? So I love this one, man, because, people are always, coming up with reasons why they can't buy a house. And Ian, I think what you're talking about is how can we buy a house and how can we do it in 2025? Because honestly, lending has been made a lot easier than I think some folks truly understand.
For sure. Yeah. I'm going to use my personal life as an example here. I got started in this business back in 2015. And, I had recently graduated school and an opportunity presented itself where my grandparents were going to do some downsizing and they offered their home to me. And I wasn't a loan officer at the time. I was recently in the industry, was still learning the ropes. I didn't think I had a shot at getting a home. So I, politely told them, I would love to, but, I'm not there financially. And I just, did my thing and they sold it to someone else. And, a couple of years later, I learned my craft in this business and I learned that, hey, there was opportunities for me at that time where I could have taken advantage of things like down payment assistance or whatever, which would have afforded me the ability to purchase my grandparents' house. And, I always look back on that as an example of why it's important for us as loan officers to kind of talk about these things with our partners, our clients, et cetera, because you may not know that you can buy a home. And that's really what I wanted to talk about today.
I love it. I love it. Well, I want to go ahead and drop this out there too, as we're getting started. If you want to find Ian, go check Ian out at the CLT Mortgage Guy. And that's on Instagram, right, Ian?
Yeah, I'm predominantly on Instagram. I'm pretty quiet in my other socials, so that's usually the best way to find me.
Let's turn that volume way up. And guys, he's very active on there. So if you want to learn more about some of the stuff we're going to cover today, go check him out, right? Make sure that you subscribe and follow him. Maybe drop the guy a comment, right? Hit him at the DM. He's actively communicating. I come visit him over in Charlotte often. And when we sit side by side, one of us has to leave the room because we're just too busy talking. So I think last time you left.
Very true.
Yeah, I think I trumped.
Yeah, last time I took the head out of there, but yeah.
So let's talk about some myths, right? So what's a myth that you think people, are experiencing today that's not true, right?
I think the biggest one that a lot of people feel like they've heard around or have seen is that you have to have 20% down. That is by far and large like the number one myth that I hear clients come to me and say as an objection to buying a home. In today's market, when you're talking $400,000 homes, 20% is a lot of money. Not a lot of people have that, especially, early into their life cycles, right? So, kind of hearing that is kind of the biggest myth I would say that I've heard around.
Yeah, so it's not 20%, and you and I know that. But what do they need to have, right? Like, what is it? What's the real number?
Yeah, so the real number obviously is going to be dependent on your various scenarios because obviously everyone's a little bit different in finances. But, I've had clients get paid to buy a home. They walk away with money. There is programs out there that can do that. A couple that come off the top of my mind: VA home purchasing. Those are 0% down options available to veterans and active duty military that qualify. USDA home loans, 0% down. If you get sellers to pay closing costs and your property's in a USDA eligible zone, you may not have any costs whatsoever on this home. You may pay for an appraisal up front and get reimbursed on the back end. You'll get a check at closing. These are very real loans right now that you can be offered if you qualify. They can get you in with zero out of pocket. Another very common way to get into home ownership, and one that I was speaking about at the beginning of this, with down payment assistance, right? Every state has some form of down payment assistance. And if your state doesn't have a good program, there's national programs that we at Premier Lending offer that are great and can get you into home ownership. Again, if you're getting seller credits with as little as no money out of pocket. So the real answer is it depends, because everything is always dependent on the various finances of the transaction and qualification, of course. But in theory, you can get literally a check at closing.
So let's talk about another one, and this still relates to down payment. And this may be a new one, but I-10 client. We recently had some transitions that says I-10 can't qualify for FHA, which now means that they have to go through another program that requires 20% down. Is that a myth or a fact?
It's a myth. So, a lot of lenders will have their own sets of guidelines for specific scenarios like I-10. One of the benefits of, our company here at Premier Lending is that we are very forward thinking and kind of look at, different avenues to help home buyers. And so we can do that as little as 3.5%.
Wow.
Yeah.
So even though the program was stripped away, there are still options out there for the I-10 buyer with as little as 3.5% down.
Indeed.
That's fantastic. All right. Well, what else you got up your sleeve?
Yeah. So, as far as like the home buy myths are concerned, I mean, the biggest is obviously the down payment, but the other is like, can I afford? Right.
Yeah.
Everyone they see a number on the Zillow calculator and they're like, oh my gosh, that's a huge barrier to buying a home. I don't like this number, whatever.
Right.
Part of our job is to help educate our clients and to go through the process so they can understand what they're actually paying for. Because a lot of people just think everything that they're paying for on the closing sheet, everything on the monthly payment is just fees. And it's not necessarily fees, right? A lot of what you're paying is for your taxes and insurance. It's not necessarily fees to Premier Lending or to whoever you're closing your loan with. And the same goes for your monthly payment. But on top of that, no one ever really talks about the tax benefits of home buying, right?
Yeah.
You close on homes, Devin. I mean, how beneficial home buying can be, on your overall taxes. So, these are things that when we're talking to our clients up front, we're getting pushback, before they've really given us a shot. We try to educate on, because, you don't need 20%, and all of that monthly payment that you're going, you're going to get some of that back on, the taxes at year end or what have you. And, there's just a lot of things out there that people just don't know.
Yeah. You know what I like better than just the tax credits is the massive payouts. Once you sell that property and, realize for the first time that you're earning equity inside of that home, right? And I think, we've all had stories where you've got a client that shows up, when they sell their first house, and they go, well, who's this $50,000 go to? And it's like, that's yours, right? Like that's your $50K, you earned that, right? Because there's a lot of folks out there, the first time home buyers, that truly don't understand. They've been renters their whole life. Their family's been renters, and they don't understand the value of, the interest that you earn on the home improving in value, right? And we know that homes typically increase about 5 to 5.5% annually. And this is historical, right? You go back 80 years. And we've only had 7 markets where homes have depreciated. That means the other 73 years, homes have appreciated. And I'm going to tell you right now, you don't get those odds anywhere else on your money, right? Like real estate is a great investment.
It's, our boss, Ferris Farage, he says it best. Real estate's the only investment that you can make money on money you don't have. Right. You buy a $400,000 home. It doesn't appreciate based on your initial investment. It appreciates based on the $400,000 price tag of the home, and so with that, it's an incredible utility at making money. And I always think about a client, that I had, they purchased, I think, in 2019 with me,
Yeah.
and they sold in 2022. We're trying to take advantage of, the rates as they were still low at the time, and, do a move up purchase for them and their family. Well, they made, I think it was $150,000 in that 2.5 year period. And I remember when I qualified that client to start, back in 2019, they had maybe $30,000. They were, barely had enough to do their little down payment on their home and closing
Yeah.
costs, and kind of have money left over for movers, right? So it was just really cool to see, in that short span of time, how much their finances has improved because of home ownership. And that's what I'm trying to preach, and what we try to tell our clients on a daily basis, is that this is, with very few exceptions, to your point, a very sound investment, historically over time.
Well, I love that you say that, man, because I had a very similar story. And I think, it's always great when you hear somebody else's experience. And, they came up with enough money to buy a townhome, and they happened to buy in the right part of town, right? We don't always see appreciation like this, but they did. And they happened to buy a townhome in an area that just developed really quickly. And they sold that literally about a year and a half later, and they pocketed $150,000, and they took that, transitioned it to their next mortgage. And, this is where things got really interesting, because they had a family tragedy. Their mother needed to have, some support. And so a year later, they reach out to me again, and they're like, hey, we're going to buy another house with my mom because this is what's going on. And it was unfortunate. But at that point in time, they'd accumulated a $250,000 in wealth over this very, very, very short period of time. And, where else do you see that type of, wealth building? Look, I've seen some people get lucky on the stock market, right? But that's luck. In this situation, it's not luck. It's just how it works, right? The real estate is always going to go up in value. So we've debunked a couple of myths, right? First off, you don't have to have 20% down. And second off, you don't have to have 20% down on an I-10. You can do that with as little as 3.5% down. And if you're a first-time home buyer, you may not have to put any money down. In fact, as Ian's demonstrated, you might even find some money coming back to you at closing. Let's talk about closing cost assistance and buy downs, right? Because you talked about a big one right now, which is affordability issues. And we are having affordability issues right now because we had the perfect storm. Property values went up, interest rates went up, and wages went down, right? Yeah. So you find people in that conundrum of, can I even afford a house right now? So how does that work, right? So if rates are a little higher and I'm a little payment shock, as you mentioned earlier, what options do I have to get into a lower payment right now?
For sure. So, when we're trying to identify, what someone's goals and objectives are for a mortgage, there's usually two things that we're looking at. We're really looking at monthly payment and out-of-pocket expenses, because when we kind of find those two answers, we can kind of figure out how to negotiate purchase price, interest rates, things of that nature. And so if we find a client that wants to reduce their overall costs, there's a couple ways you can do it. The easiest way is just reduce the purchase price. But, we can always have that luxury. The markets, have been, to your point, appreciating 5% or so, with bigger percentages during this couple of years of COVID. And so, if that's not on the table, for us to make something happen for them, then we kind of talk about buy downs. Now, there's a couple different types of buy downs. You've got your permanent buy down, which is your classic, I'm going to purchase a point or rate buy down to reduce the overall rate. So essentially, for those that don't know what that means, you're paying a fee to permanently reduce your overall interest rate. So if your rate was 6.5%, you can make it 6, or so on and so forth, with a fee that you pay at closing. And that can be very beneficial because for those that do very strict budgeting, right? You may need your monthly payment to be in a very specific zone. And if we can make that zone happen with the permanent buy down, then we will talk about what that looks like for you. Now, the alternative is doing a temporary buy down. Now, these are quite advantageous because they are very big percentage drops in the rate. The downside is they're for a temporary period of time. So when we're educating people on that, we want to make sure we go over the pitfalls, which is that it's not permanent, doesn't last forever, but it can be a nice, easy way to get into your home. In the first 2 or 3 years, depending on the buy down that you do, have a reduced overall payment. So we've seen a lot of success with clients enjoying those. I think, we probably averaged 1 to 2 of those per month for several periods of time over the last couple of years.
Well, let's talk a little bit about that, because I have my opinions on permanent buy downs and temporary buy downs. And, the way that I see it right now, I don't feel like we're at a point where a permanent buy down is going to make a lot of sense for our buyers. And this is why, right? Permanent buy down is going to cost money right now. It will potentially cost you more money out of pocket. And more importantly, we know that we're marked at some point in the crystal ball near future. If you know when this date is, Ian, let me know. I'd love to hear it. Right? For rates to
yeah, but I wish I knew. I wish I could tell you.
We'd have a lot more viewers right now if we did, right? So, somewhere in that crystal ball, we know rates are going to decline in the next 12, 24, 36 months. And again, can't tell you that, right? Because we've thought they were going to decline, and they did this year. Actually, we did see a little bit of a reduction this year, but we think that that's going to continue to happen. So I don't like a permanent buy down right now, because I'm spending money on something where I can get in, keep my money, maybe put it in an interest-bearing account, earn some money on my money, right? But it actually puts me in a position to where I could refinance when those rates go down, improve my position, improve my payments, and get locked in at a more economical fixed rate. But if you're in a situation where your payment has to come down because it's the only way that it's making the home affordable for you, right now we're in a real interesting time with mortgages. Most markets, not all. I know Charlotte is a pretty healthy market. We talked about this on the last call. Most markets, sellers are willing to negotiate right now, and so are builders. And with a 2-1 buy down option, that has to come from one of two parties. It's either got to come from the seller, or it's got to come from the lender, right? So in this particular scenario, you've got a seller that maybe be willing to negotiate, and instead of just have knocked that off of the price of the house, now you have them contribute that back to the 2-1 buy down. And what does that mean? So let's say the rate starts at, 7%. We're just going to throw that out there. Well, now all of a sudden in year number 1, that rate comes down by 2 points. It's 5%. So your payments are calculated at 5% interest rate. In year number 2, it goes down 1%. Now that rate is 6%. Now, hopefully, in my crystal ball, and Ian, I need you to throw some luck on this one, we see rates come down between now and that period of time, which will now allow for you to refinance that home that you purchased. You've never had to have the higher interest rate. You've always been in at a lower interest rate, and you're in a much better financial position for yourself overall. Now, the one thing that I'm always going to premise here is make sure that in those scenarios, if the rate does remain at 7%, that you're able to manage that 7%, that you can qualify with that payment. And we'll do that for you. We're not going to let you engage in a transaction that doesn't make sense. But I think this is something that's really popular and needs to be understood. There are ways to make homes affordable right now, even in a higher rate economy. And I put up air quotes only because I am your father's mortgage company, Ian. I started in this industry 23 years ago, and I remember our first refi boom at 6.5%. Rates were at an all-time low, and people were flooding to the market to buy homes. So there it is.
Yeah, absolutely. And I couldn't agree more. I think the temporary buy downs are a very underutilized product that's out there. When you calculate the savings over the 2 or 3 years, whatever product you end up doing's timeline, we're talking about substantial monthly savings that we're helping these clients get, with some of the negotiations happening right now. And, for people, who haven't been, offered this by their lender, you got to ask why. These are products that are not new. We've had these products for years. If your lender hasn't talked to you about a 2-1 buy down or a 3-2-1 buy down or even a 1-0 buy down, I would ask. And if they don't offer it, you should call a lender that does. We do. And, it's a very good tool to help people, manage the finances while we wait for that time with our crystal ball, to get those refinances done.
That's it. Well, I think that lender should be Ian. And if you want to find Ian, you can find him on Instagram at the CLT Mortgage Guy, the CLT Mortgage Guy. And I'm going to go on a limb. CLT is for Charlotte.
Charlotte, yes, sir.
And, just because Ian is in Charlotte, and that is North Carolina, doesn't mean we can't service people across the globe. Believe last time I looked, we're licensed a little over 30 states. So if you reach out to Ian and he can't do it personally, you actually know a guy
I do. I do.
And you still
I
work
know
with Brad?
quite a few
You still help
capable
with
hands within the
transaction.
company to help anyone out. So if you're watching this from afar, don't worry, we've got you.
Yeah, 100%. So, what other myths can we unfold today? I think we got a few more minutes left. Anything else we want to debunk?
I think credit is one that we should talk
Mm,
about. I think a lot of people think they've got to have this perfect crystal, like just completely unblemished credit score
yeah.
to be able to purchase a home. And Devin, you know as well as I do, having been in the business for more than me, that's just not true, and it hasn't been for a long time.
Yeah, that's right. Well, it's funny you mentioned that, and I know she was tuning in because I saw a heart come from her. Kelly McClarty was on the show yesterday, and Kelly was talking specifically about a consumer that she was working with, who had been talking to two other lenders, actually, strange as it is, who lender number one said, can't help you. Your scores don't work. We can't qualify you, right? Lender number two said, well, we can help you, but you need about $10,000 to pay down credit cards in order to qualify, which you and I both know that does work. Okay.
Yeah.
We as lenders have tools like the credit expert that allow for us to kind of have a crystal ball because we can actually look at your existing situation, pay down accounts on that, and it'll tell us exactly what that score will change as long as you've done the buy down within a certain period of time. But they were told $10,000 is what it was going to take.
Big number.
And then they got to Kelly, and Kelly used that program that we just talked about, and $10,000 turned into $400. The buyer saves $9,600 that they didn't have, and they're now a homeowner living in a house.
Yeah.
So here's somebody who had bad credit, who's now a homeowner, and it took us less than 45 days to get it from start to finish. And they were told no 2 times because, and theoretically, the second time wasn't a no, it was a maybe, but they didn't have $10,000. So that's a no for right now, right? So I love that you talk about that. What other ways do you know, or have you done? Like, have you helped anybody in that same type of scenario?
I have. I've been, with being in the business for a decade now. I mean, you're going to run into your handful of clients that, have the motivation to purchase, but for one reason or another, something happened in life, and they're paying a price for that, and they're getting no's from other people, and it's demoralizing. And one of the most rewarding, and all honesty, the most rewarding clients for me are clients that find themselves in those positions because they're usually kind of down on their luck and they're feeling like things aren't going well for them in life, and putting keys in their hands and getting them to open their door to their new home is a great experience. And I've done that quite a few times, and it's always funny when you talk to them. A lot of times they've talked to someone else and someone else said they couldn't do it. And that's why I wanted to talk about credit today, because there's so many people who don't think that they can, that can. And so, for any of you that have the will and the want to purchase a home, I encourage you to talk to your local lender. If it's me, I would love to work with you and talk to you about, how we can help you, and how, if you're not quite there already, like how can we get you into that spot? And as Devin mentioned in that example, sometimes it's as little as 10 or 15 days, just to get a few things tweaked. So definitely have done that. It's always interesting that some people think that you've got to have, certain things on your credit too. I've heard that people say if you don't have a credit card or whatever, or haven't had one, you're not going to be able to buy a home. And, Devin, I think you've known, because you've been, to other companies. Some companies have rules that are called overlays. And if you don't have certain credit factors, you may not be able to purchase because of their rules within their company. And one of the cool things about us at Premier is that we don't do that. We don't have overlays. We follow the industry guidelines, and the industry guidelines, tell us who is acceptable as a client, who isn't, based on their credit profile. And so I think that's another myth that needs to get busted.
I love that you said that, because you're right. Lenders do have overlays, and sometimes you get a hard no from one person just because they don't know, right? Like I've literally had situations where, the person was defending the position because they were hard coded by the company they represented that this could not be done, right?
Yeah.
But a little bit of education goes a long way, and just taking the time to understand the guidelines, go through your Fannie Mae handbooks and your FHA, your VA, right? Your USDA, and, or your niche lenders, and really understanding what they can and can't do. And then finding out why somebody else might have thought that was a no, right? Because at the end of the day, if the lender had an overlay, or if their underwriter just was outdated, they weren't paying attention to the current market, and what changes have taken place. And that's one thing that I agree with you, Ian. I have worked for other companies, and I've worked for companies that were great, that actually had really great underwriting, right? But at the same time, I've had loan officers that come to me and they're like, I can't do that. Well, yes, you can. And this is why, and this is how. Or we've had roadblocks where we've put it into underwriting and underwriting has said no, right? But we took the time to pull the guidelines and showcase exactly why. And then maybe even a phone call to HUD. Hey, let's have a quick call with you. We've got the scenario. This is what the guideline handbooks looks like. This is what my understanding is or interpretation. Is that accurate, right? And if HUD says, no, that's not accurate, this is the way we look at it, and we'll do that, then guess what? Now we've got the seal of approval. That client can close and they get into a mortgage that maybe they didn't realize they could get qualified for. So always have a second look, right? One thing I always like to say is make sure that the person that is giving you the information is qualified, right? And what do I mean by that? Well, are they seasoned? Do they truly understand what they're doing inside and out? I don't measure somebody by the amount of years that they've been in the business. I measure them by the amount of transactions that they've successfully closed. Okay. So it doesn't matter to me if somebody's been in the industry for 4 years or 24 years, right? If they've successfully closed hundreds and thousands of transactions, that's somebody that I'm going to put my seal of approval on.
Yeah. Absolutely. Yeah. And I like the fact that you mentioned the phone calls to the various GSEs. I think that's a super underrated thing that we do here. I've worked for other lending institutions and, the underwriters say what the underwriters say. There's nothing to do above that, right? And some of my past experiences. And
how about no?
Yeah, exactly. How about no is exactly right. And you just had to deal with that, right? Exactly. I love it. But yeah, I just had to deal with it, right? And I had to tell clients no that, probably we were able to purchase with another lender. And so when I found myself here at Premier Lending, I love the fact that when we have clients that are in tricky situations that maybe are between guidelines and it's kind of blurry as to if it's a yes or a no, I love that we can call and talk to the various GSEs and find out, can we make this work? And if so, how do we do it? If no, is there any recourse? So on and so forth. So we're not just giving a no. Like I never want to give a no in this business. I always want to say, here's the situation. Here's what we can do. Here's how we can get you there, right? Because that's the way that we want to do business.
Well, guys, if you want to hear more, and I know I've thrown this across, but depending on when you're tuning in from Ian and you want to get some great information and find out if we can turn a no into a yes, or how we can get you to the table, or maybe debunk some more old school mortgage myths, check Ian out at the CLT Mortgage Guy on Instagram. Again, that's the CLT Mortgage Guy on Instagram. And, Ian's part of our team. So I assure you, you're in great hands, and we're going to keep bringing him back here. So, if you like Ian, you want to hear more from him, hey, comment, DM one of us. You would love to know if you guys are enjoying the content. And hey, make sure that you follow Ian's channel and follow ours too, right? Again, you're probably already here if you're tuning in right now. Just do me a favor and find that subscribe button and click it, right? Just click that subscribe button. And Jessica, we see you out there. Jessica says, great info. Let's highlight that real quick here. Can I highlight
Thank you,
that?
Jessica.
And there we go. Jessica Holloway says, great info. I love the hat, Jessica. You're looking amazing. You're looking amazing. So, well, guys, we're going to probably call it today. This is LOS.Live, Loan Officer Success Live. And we're going to keep bringing back these shows. And if you want Ian back, just let us know. We'll bring him back on. Ian, brother, thanks for joining us today.
Yeah, thanks for having me, Devin. It was an absolute blast. Love sharing with you.
Absolutely, man. Well, guys, until the next time, we're going to see you guys then. So just, stay awesome and keep coming back for great entertainment. We're going to do what we can to give you all the tips and secrets to make educated decisions and build your mortgage business. Also, if you're a loan officer, and you want to find how to make the best business you can, that's what we're here for. So I think that's going to do it today, guys.